What's up everyone, my name's Robbie, this is Robbie in Manila, and today we're talking about the best S&P 500 ETFs. So there's a lot of ways that people utilize ETFs in their portfolios. Some investors buy stocks mixed with some ETFs, some investors only buy ETFs, some investors just want to buy a passive index like an S&P 500 ETF. So at the end of the day, if you're looking for an S&P 500 ETF, there's a few good ones to choose from, and the question is, which one's the best? So that's what we're going to decide today. So intro over, let's roll the intro and let's get into this as fast as possible. Okay everyone, before we get started, if you like ETFs, please hit the like button so you can support my channel. Okay everyone, so the first thing we're going to look at is my ETF checklist. You might have seen this before in some of my other videos. Now I want to make this video as fast as possible. I want to get to the point. I don't want to go like 30 minutes into a video. I want to get all the information as quickly as possible this time. So the first thing I want you to know about the ETF checklist is I've got the ticker symbols on the top: IVV, SPY, SPLG, VOO, SCHX. Those are the ETFs we're going over. These are the fund companies, so you know, we got iShares, Spider, we got two Spiders, we got Vanguard, and we got Schwab. So these are the different ETFs we're going to look at. I don't want to go through this whole ETF checklist because it takes forever. So just know we got gross expense ratio. It checks my box of what I want. So they're all good. So really, this Spider one, the SPY, is the only one that's going to probably not be okay on the gross expense ratio one, but I just put a check there so we can kind of get on with the video. Net expense ratio, again, all of it's fine. Net assets, they have enough net assets in the ETF. The daily volume is high enough. The net asset value for the 1 month, I don't know why I have checks here, but the premium / discount to the net asset value is what I'm trying to show you here. And they're all good, no problems there. The bid-ask spreads are fine and the tracking errors are fine. So it's all good. So basically, all of these are fine ETFs. So what we're going to do is we're going to check out and take a look at them and compare them and see which of these is really going to be the best, even though they all kind of check off the boxes of the things I like to see in ETFs. So here I have the Charles Schwab ETF Comparison Tool. So we're going to take a look at these and compare them. And so the things I want you to know, first off, actually it's kind of important, the legal structure of all of these is the same except for SPY. And I didn't know this, but SPY is actually a unit investment trust, a UIT. And so there's actually, I think, some consequences to that, considering SPY has the highest expense ratio of these funds. And then interestingly enough, so SPY is a Spider ETF. SPLG is also a Spider ETF that also tracks the S&P 500. So the question is, why would you go with SPY over SPLG? We'll get into this in a second, but that's like kind of a main question. If you invest in SPY, do you want to instead of invest in SPLG because the expense ratio is lower, which we'll see in a second. The strategy is all the same. They're not levered. They're not socially responsible. We don't need to look at all of this stuff, but main thing, the underlying index is the S&P 500 with the exception of SCHX. And the reason I wanted to show SCHX is, number one, Schwab does not have S&P 500 tracking ETF. It doesn't just track the S&P 500. We'll take a look in a sec, but it actually tracks the top 700 or so largest companies instead of the top 500 largest. So it's going to be a little bit different, and we'll go ahead and see if maybe this is another one you want to take a look at, how close it tracks the other ones. Just to have an interesting comparison, considering they're all very similar. That's the one that's kind of going to be a little bit different. Main thing we want to see here are the expense ratios, of course. So when it comes to the iShares IVV, the expense ratio is at 0.03%, and that's the net expense ratio. So that is a perfectly fine net expense ratio, very good. Then we have SPY, so 0.0945. It's a little higher than I think you should be paying for an ETF. Reason is, it doesn't perform any better or worse than these other ones. So why would you go with the SPY over the other ones? And in fact, you can go with the Spider ETF that tracks the S&P 500, that's 0.03%. It's the same company, it's a SPDR ETF, but it's got a lower expense ratio. I'm pretty sure it's partly due to the legal structure of the fund. And in fact, SPY is like the oldest ETF that tracks the S&P 500. That might be why the fees are higher. I'm just speculating, I've not looked into this. That's what I'm thinking. And if you see here, it was created in 1993, so it's old. And these other funds were all created in the 2000s. So there you go on that. And then next we can take a look at the quotes. Premium discount is important. So it's a 0%, so it's selling for net asset value in IVV. SPY is a little bit above NAV. SPLG is actually lower than NAV, which is good for you. VOO is a little bit above, and then SCHX is a little bit above. So the premium discount's not too far off, but again, Schwab is a little bit higher, so higher bid-ask spread and a higher premium discount. So these are things that you probably might care about. You might not have tons of money, and maybe it's not going to make a huge difference at the end of the day, but if you're investing large sums, this probably is important to you. Next, let's take a look at the yields. The yield for IVV is actually currently 1.94%, going up to the highest yield, which is Schwab's. So Schwab has a higher yield. It's also got the top 700 companies based on market cap, so how big they are in the US. So Schwab's paying a little bit higher yield. So maybe that's something to take into consideration if you don't want one of these other just straight S&P 500 ETFs. Although, IVV does have a 1.94% yield, even though it's tracking the S&P 500. So interesting that the yield is so much higher than these other three. So something to consider. We'll take that into account later. We don't care about the fundamentals really in the Morningstar ratings and the options and the views and things like that. So what I do want to take a look at though is the returns. And what I did was I created my own spreadsheet to kind of take a look at the different returns. So let's go to the spreadsheet and take a look at that. Okay, so this is the next part of my checklist. It's some of the returns. So I actually got all of these returns from the prospectuses of the companies. So I went in, and these are all 2019 year-end returns. So because the prospectus is a one-year type thing, so it's published usually the year after. So the 2020 prospectus has not been published yet. This is 2019. So we got all the fund companies here, and then we want to take a look at the returns. So the one-year return, why am I doing that? I'm not German. The one-year return is for IVV is 31.44. Now these are gross returns, so these don't have anything to do with taxes on distributions, things like that. So there you go, 31.44, 31.25, 32.06, and 31.46. So the highest returning is the VOO, which is Vanguard. Schwab's not on here. Let me just give you a little segue here. The reason Schwab is not on here is because Schwab, for some reason, publishes its prospectuses in December 19th, and they always have a year lag. So I don't even have the 2019 year-end Schwab numbers here. So we're gonna compare this later to kind of take a look at Schwab. So sorry about that, couldn't get it. Next, the benchmark is going to, of course, be the same because it's the S&P 500. So the benchmark that they track did return 31.49% in 2019. And so these returns are supposed to be a little bit lower probably than the index that they track. And they're all very, very close to the index. And in fact, SPLG, which I said VOO was the highest. I don't know why I said that. SPLG is apparently higher than VOO. So there you go. SPLG is the highest return, and it's actually higher than the index. So interestingly, higher than the index. Now next we have the after-tax pre-liquidate. So this after-tax pre-liquidate one-year one, let me give you a little explanation about this because I don't think a lot of people understand what this is, and it's kind of important because it helps you figure out what these ETFs return after taxes on distributions come out. Now, there are times where this doesn't matter. Number one, if you have your money in an IRA or a Roth, this isn't going to matter. So if it's a just a regular brokerage account that you pay taxes on, then you could potentially have some distributions that you do have to pay taxes on. And this is kind of telling us what the return is after the distributions. Now, this actually always in the prospectuses takes into consideration someone being in the highest tax bracket. So it's maybe not going to be your tax bracket, so in that situation it's probably not 100% accurate, but to be able to compare them all apples to apples, it's important. So that's why we have this here. So if we take a look at this, 31.78 for IVV, 30.68, 31.41, and 30.83. So what is the best returning after distributions, taxes on distributions? It would be IVV. And so partly there's some things with IVV. Oh, by the way, it also, I believe, does include the fee that comes off. So IVV has a pretty low fee compared to SPY. SPY is the lowest because probably of the fee. Then taxes. So IVV is probably more tax efficient in this one, at least for the past year, than these two. So IVV is winning on that one. This one's actually if you took a distribution. So if you like literally paid taxes on this, how much would you have after that at the highest tax bracket? So that's this one. So this one actually has a lower amount. Total return after 5 years, something else we want to see. So we look at the 1 year. Let's take a look at 5 year. 5 year is 11.65, 11.55, 11.75, 11.66. So VOO did have a higher 5-year return. So that is a gross return, total return, sorry, not total, average annual rate of return, but without any things like taxes coming out. And then if we take a look at the benchmark, 11.7. So these all performed a little bit under the benchmark, all very close to the benchmark, all very good. So next we want to take a look at the after-tax pre-liquidate 5-year. So again, let's see. This one did the best in this column here, right? So 31.78 was the best for IVV. 11.70 looks like it's the 11.40 looks like it's the best for this column as well. So it looks like IVV and the tax efficient standpoint might be better than the other companies basically. So IVV, iShares, maybe they're better at taxation. So maybe they're more efficient with taxes. That's what I'm getting from this. So next we have, again, if you took a distribution sold, 9.17%. The highest would be VOO. So there you go with that. So now let's take a look at the returns in the Schwab Comparison Tool. So we can also look at SCHX. Okay, here we are in the Schwab Comparison Tool again. Now we're going to take a look at the returns. Now these are returns that are just gross returns. They're not taking account of any types of distributions and things like that, like what I had in the previous spreadsheet. These are just the returns. So the first thing we'll see is Schwab here is on the right. Everything else we've looked at before. Now Schwab has the highest year-to-date return, which is a 4.14. If we go over, I'd like to see the 1 year, and then I'd like to see the 5 and 10. So the 1 year, they actually have the highest for the 1 year return, which is 11.07%. Interesting. The 5 year, they have the highest, which is 11.91%. And then if you even look at the 10 year, they have the highest 10-year return as well. So what is going on here? Basically, this Schwab ETF is tracking some of the large cap companies, just like the other ones. However, there's more large cap companies in this Schwab ETF. And so instead of a 500 company ETF like all these other ones are, because they track the S&P 500, Schwab has around 700 or 750 companies in this ETF, which means the extra 250 some odd companies may be adding enough alpha or enough return to the portfolio that they're actually doing better in the Charles Schwab ETF than the other ones. So actually interesting for me to see this. So what I would say is, if I was going to look at just these all together, I would say that I do really like this SCHX ETF. It's got a low fee, it's a Charles Schwab fund, and the returns have been beating these other ETFs. Now, if you strictly want a ETF that's just for the S&P 500. Let's go back real quick and I'll show you which one I like. Okay, here we are back on my spreadsheet with the returns. So here's my answer. My answer is I like IVV, and this is the reason. Number one, if you're investing in a taxable brokerage account, this is a very tax efficient ETF compared to the other ones. So first you have the after-tax return, after distribution taxes on distributions, things like that, 31.78%. It's got the highest of the different ETFs that we've looked at. Next, on the total return for the 5-year, when I say total return, sorry, I mean the return after things like fees and distributions and things like that, it's 11.65. It's almost as high as VOO, which is less than 0.01%. So I like this one. I think it might be better taxability wise on a tax efficient basis. So I would go with IVV, and that would be my answer. So IVV is the one I would pick. That's the answer. That's my best ETF that tracks the S&P 500. There you go. Okay everyone, so thanks so much for watching. That is the end of the video. I hope you found what you were looking for when you clicked on that thumbnail, and if you did, please subscribe to my channel and hit that like button. I really appreciate it, and please watch another one of my videos by clicking on the end screen coming up right now.